Good morning. Today we're diving into a story that's made waves in the financial world, the sudden surge of Big Technologies stock. Big Technologies, a leader in electronic monitoring, think ankle tags for the justice system, saw its shares on the London Stock Exchange jump 14.4% in a single day. What triggered this? The company announced a settlement in a costly, long-running lawsuit known as the Buddi litigation. This legal cloud had been holding the company back, making investors nervous and suppressing the stock price. The resolution brought instant relief, and the market responded with enthusiasm. Big Technologies is a key provider of monitoring solutions for governments and private organizations worldwide. The lawsuit stemmed from its acquisition of Buddi Limited, which had become a major distraction and source of uncertainty. Investors watch for news that changes a company's outlook. Here, the end of litigation was that catalyst. The stock surge is a textbook example of how quickly market sentiment can shift with a single announcement. When uncertainty vanishes, confidence returns, and share prices can soar. For newcomers to investing, this is a clear case of how news directly impacts a company's value. The market's reaction shows just how much the lawsuit was weighing on Big Technologies' prospects. With the legal battle over, investors see a brighter, more stable future for the company. The story of Big Technologies this week is a perfect lesson in the power of certainty in the markets. One announcement changed everything, turning anxiety into optimism overnight. That's the impact of resolving a major risk in the business world. Why did the market react so positively? It all comes down to certainty. Investors hate unknowns, especially legal ones that could cost millions. The Buddi lawsuit was a huge question mark, making it hard to predict Big Technologies' future. The settlement replaced that unknown with a fixed, manageable cost. Even a large known expense is better than a looming, unpredictable threat. Think of it like budgeting for a big, fixed car payment versus dreading a mystery repair bill. Now, Big Technologies and its investors can plan ahead with confidence. The market surge was a collective sigh of relief. Investors believe the company is strong enough to handle the settlement. With the distraction gone, management can focus on growth and innovation. The company is now free to pursue new contracts and expand its core business. This clarity excites investors and boosts confidence in Big Technologies' long-term prospects. Certainty, above all, is what the market rewards. To understand the impact, let's rewind to 2018, when Big Technologies acquired Buddi Limited. Acquisitions are common, but this one led to trouble. A group of former Buddi shareholders, holding about 7.9%, felt they were treated unfairly during the sale. In 2023, they filed a lawsuit, claiming they were wrongly forced to sell their shares. Their allegations centered on being pressured into the sale and not receiving fair value. Such claims are serious, suggesting the acquisition process wasn't handled properly. Lawsuits like this can drag on for years, costing millions and damaging reputations. The claimants were former owners, making the dispute even more significant. The lawsuit questioned the integrity of a key moment in Big Technologies' history. That's why its resolution was so crucial for the company's future. The settlement finally put this major distraction to rest. What were the former Buddi shareholders' main complaints? First, they alleged misrepresentation, claiming they were misled about the value and prospects of their shares. Second, they said they weren't given a chance to reinvest in the new combined company. Typically, shareholders can choose cash or new shares in an acquisition, but these claimants felt excluded. They argued they were forced to cash out at an unfair price, missing out on future growth. This sense of exclusion and financial loss fueled their legal action. For Big Technologies, defending against these claims was vital to protect its reputation. A court loss could have meant not just damages, but admitting to improper conduct. Settling avoided a potentially disastrous outcome. So, what did peace cost? Big Technologies agreed to pay $38.5 million to settle. The payment is structured, $31.5 million upfront, with the remaining $7 million paid over 18 months. This staged approach helps manage cash flow and avoids operational disruption. The company had already set aside $35 million for this litigation, so the final amount was only slightly higher. This shows management had a good handle on the risk. The market was reassured. There were no nasty surprises. The settlement was significant, but anticipated. The company's careful planning paid off, preventing a much worse scenario. Both sides get closure, and the business can move forward. The numbers reflect a well-managed resolution. Can Big Technologies afford this settlement? The answer is yes. Even after the initial payment, the company's cash balance would have been $61.9 million at the end of 2025. That's a strong cushion, showing the business remains financially healthy. The remaining $7 million will be paid from future profits, which are expected to cover it easily. The company's robust cash reserves and profitability allowed it to absorb the hit. Lesser companies might have struggled, but Big Technologies is well capitalized. The financial impact is significant, but far from disastrous. The company is ready to move forward with confidence. How did Big Technologies respond? Interim Chair Sangeeta Shah called the settlement a positive outcome. She emphasized that the deal removes uncertainty and lets the company focus on growth. The statement framed the payout as a strategic move, not a defeat. By drawing a line under the issue, the company can now pursue its core mission. The market agreed, with investors welcoming the clarity. The communication reassured shareholders that this was a controlled strategic decision. The company is now positioned to move forward without legal distractions. The message, risk is gone, and opportunity lies ahead. Investors responded with renewed confidence. The Buddi settlement isn't the end of Big Technologies' legal challenges. The company is still in mediation with Sarah Murray, a key figure from Buddi, and other parties. Mediation is a collaborative process aiming for a mutually agreeable solution without court battles. The company hopes for a swift, amicable resolution. This approach shows a preference for negotiation over confrontation. A successful mediation would further clear up legacy legal issues. The outcome is still uncertain, and investors are watching closely. Another lawsuit would be a setback, but a fair settlement would be welcomed. For now, the company is working to resolve all remaining disputes. What can we learn from Big Technologies' story? Certainty is king. Investors prefer a known cost over an unknown risk. Sometimes, settling is the smartest business move, even if you think you're right. The case highlights the importance of fairness and transparency in acquisitions. Mishandling minority shareholders can lead to years of trouble. Strong financial management is vital. Cash reserves provide resilience in tough times. Big Technologies' experience is a lesson for all companies. Manage risk, communicate clearly, and always prepare for the unexpected. In business, certainty and financial strength are your best defenses against storms.